It's Tuesday, August 3rd, 2021. Very, very busy today, but I wanted to make this video because, like you, I cannot believe what I'm witnessing. And I'm extremely concerned about how this is all going to play out. And I want to share a couple articles, made some notes today. And this first one comes from The Hedge. Evictions start with Pelosi and the House on a 7-week break. And as I'm reading this article, I'm watching the markets. Dow Jones up nearly 300 points. I don't know where it's at right now, but it was up nearly 300 points. S&P near another record. Robinhood up while 12 million people face eviction. This is the illusion, ladies and gentlemen, that we are living in right now. We continue to watch these fake markets continue to set all-time highs while 12 plus million people face eviction. We're looking at a national debt crisis. We're looking at an unemployment crisis. We're looking at a deficit crisis. The list goes on and on and on. But the markets are up, so everything's okay. That the economy's healthy, right? Because the Dow Jones is up today. The pain starts in the South, the southern part of this country. Laws and procedures to evict tenants in some southern states are among the most landlord-friendly in the U.S. As I said earlier, at least 12 million households face eviction. In Mississippi, tenants can lose the eviction case in court and be removed from their home that same day. This has begun, ladies and gentlemen. It has begun. In Arkansas, landlords can pursue criminal charges for tenants who don't pay rent. Western Tennessee, tenants are already getting evicted for non-payment. It has begun. I believe by this fall, we're going to see enormous changes in this country, socially and economically. Now, everyone is on vacation. So you look at the House, you look at Nancy, I think it's a 7-week vacation. So the government told everybody they didn't have to pay rent. They didn't have to compensate, the government didn't have to compensate the landlord. And so now the government goes out on a 7-week vacation. Wow. All of this has begun. While people are going to be evicted, while landlords are lining up at the courthouses trying to, chase their money to try and get some type of reimbursement, people's credit is going to be destroyed. People are going to be homeless. People are going to be in very, very big trouble. But these politicians that so many millions of people trusted, believed in, relied on, have now turned their backs. And let's not forget the federal aid assistance. $47 billion. Just a few billion of that $47 billion has been dispersed. Where is it? What happened to it? Why didn't people get help? Now, as the vacation and the people are on their own, as they're being evicted, 12.7 million people in approximately 4.9 million households fear eviction. There are 70 million people, get this, 70 million people out there that did not report to the tenure. So the 12 million is a very, very low estimate because 70 million people, we have no idea, are they renting? Are they not renting? Are they homeowners? Are they in forbearance? Are they not in forbearance? Are these, part of these 70 million people, are they behind in rent? We don't know. We don't know what the real numbers are. We don't know really too much of anything at this point. How many people are getting their cars repossessed? I was talking to Dan Golka today, and nobody knows. How do you find out? How many cars are being repossessed on a monthly basis? We don't even know the true number of people in mortgage forbearance, and we certainly don't know how many people are at risk of eviction here in America. We don't know. They don't want you to know because they just want you to keep watching the stock market, the S&P and the Dow Jones, and they want you to keep investing in Robinhood. They said that the average Robinhood account is $4,000. That's not a whole lot of money, ladies and gentlemen, and yet we're being told that all these Robin Hooders making all this money. Most of these people make a couple $100 here and there, or $1,000 here and there. And these are the same people, these Robin Hooders, who have no idea what is coming. They're gambling what little money that they have, and they have no idea the risk that are in the horizon. Okay, these people have never seen a downturn. They've never seen a collapse. Many of them don't remember or were not around during 2008. So these people are taking huge risk with every cent that they have, money that they receive from the government, benefit checks, unemployment checks, stimulus checks that went into the Robinhood accounts. They're gambling it all away into cryptos and into stocks, and continuing to inflate these bubbles. And these people, and many of these people, this is all they have. $3,000, $4,000 in their Robinhood account, that's all that they have. They're going to get absolutely annihilated, wiped out. They are gambling with all the money that they have, even though it's not a lot of money, and money that many of them didn't even earn. It was given to them by the government, and it's going to be wiped out. Just think, all this government money went to buying cheap products from Asia. It went into the stock market. It went into the crypto market. If you strip down all this government money and took it away, and it wasn't allowed to just be passed out to people for free, where would the markets be? Where would cryptos be? Where would all these Asian products be right now if the government wasn't printing money out of thin air, putting digits on a screen and handing it over to people? What would this whole economy look like? It would be a whole different landscape, I can tell you that. The Hedge today, Peter Schiff, fake economic growth and stealthy government default. I'm going to paraphrase through this. Great article. If you get a minute, check it out. I think Peter Schiff is spot on, and he's been predicting this crisis for a very, very long time. He's been 100% right. Rising prices create the illusion of economic growth. This is not the sign of a strong economy. So you could go, well, look at the $300,000 house from a couple years ago is now $600,000. So the economy must be doing great, right? Because the house has doubled in value. Not true. This is not the sign of a strong economy. CPI doesn't capture the real price level. Peter said, if we could deflate the GDP using a legitimate measure of rising prices, we likely have an economic contradiction, despite the fanfare about all the economic growth is in fact an illusion created by inflation. Inflation creates the illusion of economic growth, even as the economy is not growing. Breaking down the GDP components, he goes on to say this: virtually all of the second quarter GDP growth came from an 11.8% leap in consumer spending. This accounts for 70.6% of total GDP, the most ever. It was the first time consumer spending has made up more than 70% of GDP. Incredible. We have an economy based on spending, consumption, and we're spending money we don't even have. This money was given to people. They did not produce anything. They didn't earn anything. They didn't make anything. And look, I know people needed help, and I get that. But we cannot have a country where people are sitting at home getting free money, not producing anything. This is why China is eating our lunch. We had no legitimate economic growth at all. All we had was people spending money, and they spent more money because the cost of everything has gone up. So it's rising prices, not a growing economy. That is behind the gain in GDP. And where did Americans get the money? They got the money from the Fed. How long can this go on, ladies and gentlemen? It can go on a little while longer, but it is not going to last, and you need to be preparing for the outcome here. This is going to be disastrous. We are so far up and high on the cliff. When we get pushed off, it is going to be a real disaster. We're watching the government default on its debt, a stealth default through inflation. The U.S. government wants to use inflation to shrink the absolute amount of debt in relation to the economy. The government is repaying its creditors with money it borrowed. Creditors are getting back money that has less purchasing power. Creditors are getting back less in real terms than they loaned, which is one of the main reasons the government is deliberately causing inflation, because it has no way of getting out of this debt. And this is what Peter calls a stealth default. And this makes a lot of sense. Given how big the debt and deficits are, we're going to see a lot more inflation, ladies and gentlemen. We're going to see a lot more inflation. There's no doubt about it. Your purchasing power is going to get eaten alive. Prices of literally everything is going to continue to go up until it doesn't. At some point, I do believe we're going to see interest rates go up, because this is going to get so far out of control. They're going to have no other choice but to raise rates. And when this occurs, you're going to see the worst depression in human history. My opinion. Let me know what you think. Comment down below. I know a lot of people think that we're going to go on forever, never be able to raise interest rates. We're going to print money forever. But if you print money forever, at some point, it becomes worth zero. And then at that point, you have no ammunition left. You have no medication for the patient. So if you take the dollar to zero, then what? We're done. So I think at some point we're going to see interest rates go up. How far up, I don't know, but it's not going to take a whole lot to collapse the entire economy. But we're collapsing the US dollar right now. Soon we're going to collapse the markets, and we're going to collapse what's left of this economy when interest rates go up. Household debt jumps by the most in 14 years to nearly $15 trillion in the second quarter. This on CNBC today. This crash, ladies and gentlemen, is going to be epic. They have suckered millions of people into these markets, millions of people into the housing market. And, I have to go back and say this. A lot of these real estate agents that you trust, that you believe in, who you're taking financial advice from, you have to realize many of these people were doing nails 2 years ago. They were estheticians 2 years ago. They were soccer coaches 2 years ago. And I'm not condemning anybody or putting anybody down here. But the biggest investment in your life, whether you're buying or selling, you better know who you're dealing with and who you're hiring, okay? There are some very, very good real estate agents out there, but a majority of them are horrible. Many of these agents never even had a job. Many of them living off of alimony and child support, spending somebody else's money while they're telling you how to spend your money and to make the most important financial decision in your life, when all they've ever done is spend somebody else's money. There are people in this business, in real estate, who've never had a job, yet they're telling you how to invest $600,000, $700,000 in a house in Riverside, telling you that we're not in a bubble. Okay. Now, many of them don't know, because they don't really follow the economy. They don't follow the markets. They're just trying to sell a house and make money. I understand that. Anybody following these markets, whether it's in housing or they're following the stock market, or they're just following the economy in general, there's no way anybody that's an honest person is not telling you right now that this is the biggest bubble they have ever seen in their life. Okay, period. But too many people trust people because they're a real estate agent, not knowing that their agents never had a job, or they were an esthetician a year or two ago, or they worked at a nail salon, or they worked at a tanning salon a couple years ago, and now they're giving you financial advice. And people are so out of it, I guess, delusional, that they're actually taking financial advice from these people. So be very, very cautious with who you're taking financial advice from. Be very, very cautious of who's telling you this is a great time to buy a house. And again, there's some really, really great agents out there, but be very careful. Know a little bit about who you're dealing with and their history. So did they have a history of just spending money because their alimony checks and their child support checks, or their, career as an esthetician or working at a nail salon? And again, I'm not condemning anybody, but look, if you're going to spend $500,000 on a house right now, let alone $1 million or more, you better be dealing with somebody that knows what they're doing. I mean, if you're selling a house right now, are you going to trust somebody with your $500,000 $700,000 or $800,000 house who has absolutely no experience other than cashing an alimony check or working at the nail salon. I mean, these are things you better be aware of, ladies and gentlemen. So again, be cautious with who you're taking advice from. And look, I don't give financial advice. I'm just a guy with a camera and a microphone. I'm talking out loud. And I think we all need to be critically thinking for ourselves right now. Household debt rose $313 billion in the second quarter to nearly $15 trillion. We have got a debt nightmare out there, and people cannot stop spending. You know, this FOMO, the fear of missing out. You know, oh, you better buy the house now. Next year, you're going to be out of the market 2 years from now. Ladies and gentlemen, you are going to witness the biggest real estate crash in human history. It's coming. In dollar terms, that was the fastest growth since the second quarter of 2007, and at a 2.1% was the fastest percent increase in 7.5 years. Look, we're going back, comparing this to 2007. Do you see the similarities? You know what happened in 2008, right? But I hear so many people repeating the same things I was hearing back in 2005, 2006, 2007. People felt invincible. Sellers, invincible. Greedy, right? Real estate agents, invincible. It's never going to end. Builders, contractors, invincible. It's never going to end. Laughing at me. 2008 hit and the laughter stopped. Over the past 4 quarters, mortgage originations have totaled close to $4.6 trillion, amounting to 44% of all outstanding home loan balances. This is just an absolute meltdown. We're watching things overheat at this point. And look, the motor's going to blow up. We're gonna blow a piston, a ring, whatever, the tranny. Everything is overheating, okay? You're going to witness this. So I'm going to end it with one last article today, and it comes from CNBC. It's titled, Senate Infrastructure Bill Cracks Down on Crypto Tax Reporting, How It May Affect Investors. The Senate's $1 trillion bipartisan infrastructure bill calls for increased cryptocurrency tax reporting to boost revenue. The enforcement may bring an estimated $28 billion over the next decade, according to the Joint Committee on Taxation. These new reporting guidelines may affect investors and companies that qualify as brokers. Look, cryptos are on borrowed time. The government, the central banks, they're not going to allow the competition. And we are going so far into debt. They're talking about taxes going up $1.5 trillion over the next decade. Now they're going to go after cryptocurrencies. I thought nobody could touch cryptocurrencies. I thought that they couldn't track your cryptocurrencies. I thought that the whole reason you have cryptocurrencies is so you could avoid taxes and have purchasing power. Well, it looks like the government isn't going to allow that to happen. And we're going to find out who's more powerful, cryptocurrencies or the central banks and the U.S. government. I guarantee you this, the central banks, the Fed, the biggest central bank of them all, and the U.S. government aren't going to allow cryptocurrencies to exist in the form they are right now. I guarantee you and promise you that the U.S. government and the Fed is much more powerful than any cryptocurrency, and it will be much more powerful than any cryptocurrency. All the Fed has to do is come out with their own cryptocurrency. All the U.S. government has to do is tax it to death or just flat out ban it, and it's over. And this is why right now, as I make this video, Bitcoin down $1,200, back in the high 37,000. Again, struggling to get to 40K, to stay at 40K. And we haven't seen anything yet. They are going to hunt down cryptos. So buyer beware, be very, very cautious. Again, if you don't hold it, you don't own it. This is why I like gold, this is why I like silver. I can put it in multiple locations. I can put it in places. Nobody knows what I have. Nobody knows what you have. I can pass it down to anybody I want to. You can pass it down to your kids, your grandkids. Nobody knows. And it makes it very, very hard to find, very, very hard to tax. I'm going to leave it there today. Please comment down below. Let me know what you think and what you see coming and how you're preparing. Stay on course, ladies and gentlemen. Do not get complacent. So much is happening behind the scenes right now. The whole banking system, the financial system, much more fragile than people think. We're going to wake up one morning and we're going to be in a whole different world. I hope you're prepared for it.